Hi guys, welcome to the C2S Enterprises YouTube channel. I'm Dima, and in this episode, in this video, I'll be teaching you how to, calculate price movements. Calculate your price amounts, while trading. Okay, so sequel to this particular video, I made this particular video, which is actually blowing up. It's currently at 10K. Thanks, guys. So in that video, I did I showed you guys how to calculate price movements, for synthetic indices. So a lot of people are actually asking me to do something like that for Forex trading, and hence that's why I'm actually doing this particular, video. Since we are huge advocates of risk management, we actually want you to, know how to calculate price, know how to calculate, your money here in the in the trading space so that you can actually make more informed decision before trading. Okay, all right, so before we get straight into it, so make sure to subscribe so you can see, go over here and click the subscribe button, enable notifications, say again like that whenever we drop awesome content like this. So let's get started, guys. So like I said, we're going to be, learning how to calculate price movements, okay, in Forex trading. And the goal of, doing this is to actually show you how to, manage risk, okay? Because you can't actually talk about risk management without first learning about how to calculate, price movements, okay? That will actually help you know which trades are worth taking and the ones that are not worth taking. So make sure to stay at the end of this video because I'll just be revealing the direct formula for doing this, but because I'll be taking it step by step. So the first part is to treat the concept of PIP, okay? So PIP stands for price interest point, okay, which is basically, the unit, of measurement, to express the change in value between two currencies, okay? So the sum will have, meters for measuring distance, seconds for measuring time. We also have, pips to measure, price movement. You can call it, like the metric for measuring price here, okay? It usually starts the calculation, to calculate it usually starts from the fourth decimal point. DP means decimal point, for the 5 decimal point pairs. Okay, so if you have a 5 decimal points, like Euro USD example, the calculation starts from the fourth digit. Why for the for the 2 decimal pairs, it starts from the two and from the second decimal place. Okay, so the 2 decimal pairs are usually the yen pairs and all that. All right, so just something to take note of there. Now let's talk about calculating trade amounts, all right? So I know you must have been aware of the general formula. Okay, when you come into the forex space, you are being taught the general formula, okay, which is amount, okay, in dollars or whatever currency, equal to the number of pips times the lot size times 10. Okay, um, this is not actually the most accurate, formula if you want to get, the direct amount, okay, the exact amount, okay, because what this will do is it will give you a general amount, okay, so depending on, the amount of lot size, it might not matter when you're dealing with, small numbers, small lot size like 0.01, okay, but when you start expanding, when you start increasing, going all the way to, let's say, higher lot size of, let's say, one, mega lot size, it's the difference starts showing up. Okay, so now a lot of calculation actually goes into deriving the real formula. Okay, I don't want to post the real formula here because the real formula is actually very, very long, because the real formula will actually involve you getting your value for p, value per pip for that particular currency pair, and then using that to multiply, by your number of pips to actually get the amount, that pip is actually going to give you, whether on the profit or the loss size. But the short formula is actually going to give you something like it, okay? And that is actually difference in price, multiplied, by your lot size, okay? And the difference in price is not in decimal places, okay? The difference in price is as regards to integers, okay? So you get a difference in price, the whole numbers, as you call it, that's what integers mean, and then you multiply it by the lot size, okay? So an example of this is what I have here, okay? So if you're using a tool like TradingView, okay, TradingView actually, is the number one, charting tool out there in my own opinion. So let's say you get you get a number of your price difference. Okay, so there's usually a tool I use for calculating this, and we call it the position tool. So you grab your position tool and you set it. Let's say this is your entry. Set it as your entry, and then you set, this is going to be where you're going to, set your stop loss. Okay. Now I'm showing you how to use this to, make risk management decisions. And then this is going to be set at, your profit value. Okay. Over here, you can see, which is the screenshot I have on this presentation. Okay. So over here, you can see, some parameters. So you can see it has, the difference in terms of, the direct, subtraction from your entry point to your stop loss. Okay. But when you go close, after, where you have the percentage change, you see a number here. Okay. So in this case, it's 40.6 or whatever. Okay. The whole number here is actually the number we're looking for. Okay. I'm just trying to show you, a direct way to get this without actually, going through the house of, pressing your calculator all the time. Okay. So this is also the way your MetaTrader gives you, the amount, you are making or losing on a trade. Okay. But that, if you want to use MetaTrader, that will mean, you're having to place the trade. But now we want to know, the amount so that we can do to make, risk management, decisions before actually going into the trade. Okay. So now you get this number. This number is what I'm looking for. And now in this case, where I have, my presentation, so you can see in this case, it's actually 39.4. Okay. So I'm going to circle that. Okay. Let me zoom in. So as you can see, it is 39.4. So this is what I'm looking for. Sorry. So this number here. Okay. So the number after your, your decimal place numbers and after the percentage, this number here is what you're going to be using to multiply, with your lot size. Okay. So now let's go over. So in this case, it's going to be 39.4 times 0.01. That's if you're using the micro lot, that's 0.01. Yeah, whatever lot size you have. And doing this, doing this simple multiplication is going to give you the amount. Okay. So what this means is you're going to look at these amounts and then you're going to know, oh, is this, let's say I want to reach, 1% of my account. Okay. So if 1% of the account is, let's say, I'm just trying to say, okay, let's say 1% of the account is $1. Okay. So it means, in this particular trade, this particular sample I have here, you are actually going to be mixing right around 40 cents. That's 0.39 and 394 for this particular trade. Okay, on this particular side. So now you know that this is within your risk management, and then you can go ahead and place the trade. But if let's say your intention was actually to, okay, let's say your intention was actually to use 0.10, let's say, you see that you'll be getting a value of 3.94 instead. Okay, and in that case, if you're someone that wanted to use to reach $1 for this particular trade, that will mean you're going against risk management. So you see how this calculation actually helps us stay within our risk management principles. Okay, and that is the goal of this particular tutorial. So you can also see you can also use it for calculating your profit point. Okay, so here you have 100. Okay, so if you take this 100 and multiply it by, let's say, the lot size you want to use, let's say 100 times, you want to use a lot size of 0.1. Okay, so that will mean you'll be making $10 on this trade. Okay, so then this is for take profit. Okay, that will be a profit point, and then your stop loss would be this, which is 39.4. Okay, 39.4 then times 0.1. So mean you're risking $3. Okay, so in this case, this will give you an idea of, okay, this is how much I'm risking on this trade. I'm willing to risk on this trade, by the way, and then how much I'm going to make. And this will help you make more informed risk management decisions. So that's the point of knowing how to calculate this. Okay, so I didn't want to just bore you with the long formulas, having you do this, get this number, plot it here, and do this. So that's why I would use this tool, which is a tool I believe all of you are aware of. Most traders use TradingView. Just get that number, multiply it with your lot size, and boom, you have the amount there, whether on the stock level or the take profit level. All right. So that's basically, what I wanted to show you guys in this video. So I believe, you've learned a lot from this video. This video came out of popular demand from you guys. Okay. So make sure to, subscribe, like I said, to keep, in touch with more of these videos when I post them. And if you have any questions or any, shout outs, or you just want to, say thank you, or, whatever, you have any video idea you want me to make, just leave it in the comment section. And if you actually gain value from this video, which I believe you did, make sure to smash the like button and share with your friends so that they get value too. Okay, I'll see you in the next one, and then please check out the links in the description of this video, and see what resources you might need in your day-to-day trading. All right, I'll see you in the next video, guys. Bye.